Happy morning, CTM. What's going on, everyone? I hope you are well and doing great. This is Jordan with Conco Trading and Investing. Wherever you are right now in the world, good morning, good evening, good afternoon. I'm so glad to be here with you. We're going to be taking a look at the markets. I was preparing for today's session with you all just now, and I was setting up and queuing up at different things. This was not amongst them. I was queuing up, obviously, the current, let's say, map that we've been following over here, and very interesting how price has not yet closed below the red line. It was on the verge. I thought that this morning's erratic activity was due to the options expirations. And then I kept going, and I'm looking, and I'm setting up, and I wanted to bring this to your attention. I'm going to talk about the last time Bitcoin was going sideways. Granted, on no volume, we have volume now, and then when it melted down. And if you remember, the last rate hike of the tightening cycle was down over here, but price fell off a cliff prior. I was looking into what that was. That was the date over here on Wednesday, November 14th, and it was Chet Powell speaking that caused that meltdown. So I went back to look what the local opinion and news at the time was. I wanted to go through that with you briefly. We got obviously, let's see if the expectations are changing this morning. Not really yet, all right? Why would I say they'd be changing? As right before I went to go live, I see this buried story over here, because obviously we're seeing that potentially the White House is doing a national security review against Elon Musk and blah, 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 blah. But we're looking at this. This is a big deal over here. We're seeing that the spike was not because of the options expirations and all that crazy activity, but potentially we're seeing, I haven't even clicked on this or read it yet, but the Fed whisperer from the Wall Street Journal, or the Fed's communication piece, is hinting at a pause. And don't forget, the pause is the pivot. I don't know anything about this yet. We're following price and price action. This would be quite interesting. Do you think that the Fed would give up its the shred of credibility that it has left by giving up on its one communication piece? What happens if the market is pricing in something different? Like, this is the market pricing in what expectations are for the November meeting, and right now it's pricing in a 75 basis point hike. If that is not what the Fed intends on doing, unless they sincerely want to catch the market off guard, to surprise the market, to have let's say a better reaction. And why they would want to do that is because often the Fed's moves are front run. They're going to communicate that, and the way that they've chosen to do that has been through the Wall Street Journal. Do you think that, here's the reporter's name, do you think that they would go ahead and give up that last piece of credibility, so that if, again, they need to communicate, people won't trust it? I don't know. Again, I don't know anything except from a headline of what's happening over here. So you could see rate cut expectations this morning going up. The Fed's terminal rate, pay attention to terminal rate, because we're going to be talking about that as we get over here a little bit later this morning. And yeah, rate rate hike expectations in November are still at 75 basis points, but you do see that December are coming in a little bit. That's interesting. I don't know what to make of it yet. Just reporting what's happening in real time, because we're following price. Let's get into it a little bit morning. Yeah, Kevin, I'm so glad to be here with you all as we get going here this morning. If you appreciate being here at any point in time, I do really humbly ask that you hit the like button. It does help the channel with the Google algorithm, and it helps bring other people into the community. And that's where all the love happens. No question about that. Oh, I love it. Opinions on what's going on because it's a fun Friday. We get to take it easy. Do you want to be initiating any new positions on a Friday morning? That's going to come into question as we look at the current price of Bitcoin and we see that we might get a potential close on this candle below the red line. Would you be biting? Or are you going to be using the conservative line? It's a question you need to ask yourself. We'll be asking ourselves that or talking it through in just a minute. Very suspect the pause comes on a weekly option expiration day with a lot of shorts. Yeah, I mean, it's all suspect. There's no question about that. These market manipulators, these money masters, they have nothing but the mess. When people talk about the Fed is behind the curve, I always laugh. I don't think they're ever behind. I just think that their incentives are different than our own. What's really interesting is that you often hear me say, or if you're following on the Twitter, you often hear me talk about as people think that the Fed is going to continue to hike till something breaks. I just try to say, listen, I think it's going to be a lot longer than you expect until something breaks, because I personally think what the Fed is trying to do is expand the cycle out as long as possible. I personally, it's just my own opinion, don't think that the Fed wants to go ahead and hike things until things break and then have to come back in and print a bunch of money and expand their balance sheet. I don't think they want to do that. But what's interesting, if you come over to this headline over here, you could see that Fed Williams is saying the goal is to keep the expansion going. And I do believe this is November 2018. I do believe that's always the goal, is that they want to keep the music playing as long as possible. Again, a lot of people thought going back into the spring of 2022, I'm talking in April, May, they thought that things by then already would have had broken. We're now into October, we're approaching November, and things are not only not broken, we're looking at the 2.8% GDP print for the third quarter. I mean, things are running hot. Well, Jordan, we're looking at the Bank of Japan is on the back foot, but how long has that been broken? That's been broken for like the last decade, right? What about the Bank of England? They had to pivot, and even in their tightening, they're actually doing quantitative easing. What's going on over there? Yeah, but that's not the Fed. We're talking about the Fed. We're talking about the dollar-based system. We're not talking about the pound-based system. And of course, that there's going to be reverberations across the financial market as we see rates in the U.S. go up, as the dollar go bid in this dollar-based system. But is that anything that's going to cause the Fed to pivot? No, I think that's causing other central banks to have to go ahead and do what they need to do. And we also talk about the dance not only between Bitcoin and Ethereum, the dance not only between Bitcoin, the beautiful dance, the beautiful dance between Bitcoin, Ethereum, and Cardano, but between the central banks. And one of the things that we said that our expectations were, as the Fed began tightening, that you would see other central banks picking up the slack and easing. I mean, whether it's the ECB or the Bank of Japan, at the Bank of England, I mean, they're all easing, right? So anyway, yeah, there you go, my brother. So a lot of people always feel the need to be in the market. And there comes a point in time in your career when you realize that you don't always need a position, and actually you're going to do much better from the sidelines, watching the markets, waiting for things to be clear, and then going ahead and entering. Don't forget, it is a Friday. That's why we call it Fun Friday over here, because you get, by this point, you're either managing positions, really looking to pick up a new position on Friday. Let's get into it. I don't even know why I'm on this screen over here. Let's jump over to this one. And what's really interesting here, you're looking at Cardano, right? You're looking at, first of all, Bitcoin in this narrow range ever since June, going sideways. Does it look like it's about to have the floor drop down below it? Potentially. The one thing different, because we're going to be talking about 2018, because it reminds me of when Bitcoin was going sideways. That was on very low volume. This is on rising volume. It is different. And you could see since September, Bitcoin over here on the bottom, you're looking at PNL. On the bottom, you're looking at P&L. And you can see that Bitcoin in the sideways range, you could see going into drawdown over here. You can see over here, Ethereum, same place, making that new all-time high on P&L and then going sideways and down. See the portfolio allocation of adding Cardano. We've been looking at this for months, right? Look over here. You could see the weakness of an altcoin in a bear market and Cardano over here jumping down. I saw a lot of YouTubers, a lot of, no, I shouldn't say YouTubers. Well, maybe they are YouTubers. A lot of influencers talking about like Cardano down here and like picking up. No, I mean, this is like 22, 25% already open profit over here. The trade was on the breakdown. Here's the breakdown over here. And you can see the P&L going up high. Look at the beautiful dance over here. I'm going to come back over here and look at when price was consolidating in this area over here. This is February to March. And you could see when price goes into consolidation, trading a momentum-based system. Do you trade a range-bound system or do you trade a momentum-based system, a breakout type system? Are you looking to take profits and profit off of expansion, or are you playing on the range? I go with the expansion. I make money when things are running and when they're going sideways, and you can see that price is just in slightly sloped up, but going sideways, you could see the P&L come off over here. And it wasn't just on Bitcoin. You could see same thing happen over here. Ethereum, this is a bear flag, sideways price action in a channel, going sideways. Cardano in that area, consolidating off the bottom. Look at that wedge. I need to have a drawing tool with you. Hold on one second. Boom, boom, boom. That's one thing that's also in common, right, Lou? Looking at 2018, looking at today, you could see that the volatility were historically low as they are today before looking at that breakdown. That's a similarity, right? There are differences. There's actually many differences, but there's many similarities. I'm trying to see if I could get, there you go. You could see that descending wedge over there, right? And then the nice breakout on Cardano. So you can see that when we talk about the beautiful dance, you can see as Bitcoin is over here in contraction, it's running sideways, not making any new all-time highs on that P&L. And yes, bear markets are beautiful, right? You can see on the buy side, the P&L growing over here. Here's where Bitcoin peaked over here. But the transition, this is the hard part. The transition from the bull market into the bear market is the hard part, and you run sideways here for an extended time. Look at Cardano for an extended time, not making any new all-time highs at all on the P&L until you make the transition, and then you're able to pick it up here on the short side and start running on the short side, right? Even when you have a bear market rally, you could trade both sides, right? Here you could see a big Ethereum putting up that massive 52% gain from the middle of July into August over here. You could see the P&L running over there. And Cardano was doing nothing. That's why we talk about the beautiful dance. Bitcoin over here was doing nothing, going sideways during that period, but Ethereum picking up over there. So portfolio diversification is a big one if you want to go ahead and smooth out not only the drawdown, but also the equity, the slope of the equity curve on the upside. Let's take a look at what's going on over here, as it is a Friday. So let's pretend for a minute that current price action was down over here and was going to be closing below the red line. And I just posed the question to you, would you take that trade? If you were looking for an aggressive entry, and we were defining an aggressive entry as being something that was looking at trading below one of these red lines over here. Hold on, go back over here. Got the on the sell side or on the buy side as price was coiling up over here. Volatility, Lou, historically low. We looked at that, I think, on Monday or Tuesday. We could pull it up again later in the session, but historically low. And as price goes sideways, and we were just looking at all those times that price goes sideways, that's when you're getting ready for a big, big move. Only right now, we are looking at price, not only going sideways these last 6 weeks in a very tight range, or really since June, over the last few months, we're getting ready for a big move. I don't know if it's going to be to the upside or downside. And people ask me, well, what's my gut? Do I think that it's going to go to, I don't know. And I really don't care. And you're in a much better position once you get there. And I want you to get there. Like if you're following over here and you're watching and you're using some type of technicals, and by the way, technicals are simply to give you levels to manage your risk off and around. You're not trying to predict what's going to happen. And as we're in the center, in the neutral coiling, I don't have expectations if we break down or break up. I do have a little bit of muscle memory of what happened in 2018 as price went sideways. There were a lot of people throughout those months who were just hoping that price was going to hold and Bitcoin was going to bottom there and go up. There were a few who wanted to believe that price was just going to like capitulate down, right? And then after it did, everyone became as bearish could be. And they started talking about price targets that were significantly lower, another 50% lower. Either way, it's not going to happen. It's going to happen the same again. If we see a breakdown over here and price come down towards, I don't know, $14,000, $15,000, $16,000, people are very going to quickly be talking about 50% lower. But I don't know which way we go, and I don't want you to have an opinion of which way it goes. I want you to trade what's happening. If you see a price close down below here, it could go one of two ways. You might want to give yourself a little bit of further confirmation, right? We talk about this being the conservative, the affirmation of the break, because I don't know if you want to take a position on a Friday, especially this volatile Friday with a lot being priced in, not only from these, whether they're suspect or not, these leaks that we're seeing about the Fed potentially moving towards a pause. By the way, what could happen later in this session is you could see a Fed speaker come out and completely deny that. If that happens, you're going to see price sell off and sell off significantly. I don't trust anything or anyone when it comes to these monetary overlords. So let's just follow what's going on with price. There's a chance of everything and all the time. And always, as you're looking at a tightening cycle going on, you will, of course, there's a chance they'll pivot. There's a chance that, as Luke Gromen said, that the last hike was in November was the last, in September was the last one. Now, I don't think that's the case, and I haven't thought that to be the case, but you never know. They're never going to tell you that they're going to pivot ahead of time. Just have to understand that. But Neo, let's just be open to everything. Let's coming from the mindset that we don't really know what's going to happen, and we try to view these things and work them out. And we have a really long history across many different cycles here, being on the right side and getting it right in real time. There's no question about that. But let's do it from a standpoint that these are unprecedented times and we don't know what happens next. And I do think that the economy is running extraordinarily hot. And a lot of people, again, they expected that hard landing to have occurred in 2022. Here we are now. We're getting further out there. We're getting into November. There's 2 months left. And we're looking at pretty strong growth. Job market's tight as can be. GDP pumping. We're not seeing that hard landing, are we? So could they continue tighten? Yeah, let's just go at it. We don't know what happens next. It's a good place to be. We are neutral at the moment in between both. The red line on the upside would be an aggressive buy entry. Aggressive. Notice the terminology, aggressive. That's like, you don't have to be aggressive. You could give yourself, in this uncertainty, time and confirmation. This is looking at this from a log scale. It's my intuition of what's going to provide the correct way to go about this. We'll look at a linear as well because they give different types of, let's say, confirmations of a breakdown. You can see below this line over here on the sell side, you're looking at 18,500. On the upside, you're looking somewhere around 20,000 right now. By the way, that's obviously a moving target. The further time goes out, the lower it's going to be on the upside, and the higher it's going to be on the downside. Let's also view that from a linear perspective, and you can see that breakdown is lower, about $500 lower, where you get some type of confirmation. You might prefer to be looking at this view or trading off of this. That's for you to decide and for you to discern. By the way, when you have spikes over here on the upside, and you get a breakout, if you can see that I'm going off of the closes over here, the close over here. If you get a breakout over here, you still have to be wary and worry about these things over here. I'd like to go ahead and clone it off the top over here. And I'm going to go off of this bottom one. You see this wick, and you see how this wick lined up to these two wicks? This would be like a little bit of like caution zone, right? I'm going to go down over here, and I'm going to go up one more, and I'm going to go over to there. and I'm going to go off that high one as well. And I'm going to say, you know what? If you're taking on the linear chart over here, a breakout over here, you're not like out of the woods. And you can see over here this really strong 20,500. That level's firm in my mind because we've been watching it all week. That's horizontal resistance. So really 20,500, I want to just mark that up, just like 20,500. You're clearing not only the horizontal resistance, you're clearing the trend line resistance. That's a safer place. What usually happens to traders is that like they're thinking about upside potential and they're thinking they're missing out. And if you could get rid of all of that nonsense, which means that like if you've been trading these past week, and I know my YouTube videos have been quite boring because I'm talking about like patience and staying outside the chop. But if you can't imagine how much money you saved, even over here, by the way, we did a live video over here, right? Or that upload as price was down over there, keeping people in the trade. I mean, if you make much more money by staying outside of that chop because you're not losing money and then waiting for the right time. I hope that you all learn to really, and some of you are quite patient, and it's really one of the hardest things to learn in trading. There's no question about that. All right, let's keep going. Let's have a little bit of fun. Boom, 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 boom. Yeah, so look, here's the thing about Lou. I love the conversation, and here's the thing. Often, so many of you make certain comments at certain times, and then in hindsight, they wound up being spot on. There's no question about that. All the time, it happens. So when we say they haven't made a dent in inflation and things like this, I mean, they track this year over year, right? Month over month and year over year. And as we start moving forward over the next few months and you start looking at these really high inflationary prints, year over year, it's going to appear deflationary. You know, like it's not like those prices are ever coming back down. It's why we call it sticky. But from the way that the measuring stick that they use, they're going to be able to claim victory. So you have to think about it like that. And you also have to understand it's not really about inflation because that inflation has been hidden for so long. Because if you remember what prices were in 2000 and then what they were in 2010, everything cost more money. Only from the way that they hide it within the CPI, they could be like, nah, inflation's 2%. I don't know what you're talking about. Oh, your cereal box got smaller? Oh, I don't know anything about that. And then, you know, the next 10 years, things got a lot more expensive between 2010 and 2020, right? And then forget between 2020 and 2022 now, things went up another 30%. I mean, the inflation is real. The inflation's not going away. The inflation's sticky, and they're going to continue devaluing the monetary supply. Now, right now, they're not devaluing the monetary supply. They're contracting it. The opposite is happening. It's happening ever since November. We looked at monetary supply total, and we're seeing a contraction take place. It's why when we talk about Bitcoin being a hedge against the debasement of the currency is not being debased at the moment. But it will again. It's a dollar debt-based system. It's a Ponzi scheme. And the only way to keep going is to go ahead and continue debasing the currency. Now, they don't have to do that all the time, and you run into trouble. You run into time frames when you hear like they can't taper a Ponzi. Well, yeah, they could taper a Ponzi. They could even raise rates on the Ponzi, and obviously a lot quicker and stronger than most believe. Rate shock 2022. Bitcoin is not immune. And the same thing is that they could also go ahead and start easing even when inflation's running hot. So that you know, don't think that they can't do anything. They could do it all, and they do it all. All right, let's jump over. Let's take a look, and I want to take a look at this little bit. This is where we were running sideways in 2018, and price fell off the bottom, right? Let's take a look at that first from this perspective. We're right here, and I just want to show you in real time what that looked like. I'm coming back over here to 2018 really quick with you. And then we're looking at, but what's 5,500? I have no idea. All right, so we're looking at price here going sideways for an extended period of time. We've talked about and we've looked about how that was off of what? Very low volume. You could see price going sideways on very low volume. By the way, it was talked about earlier about looking at Bitcoin's historic volatility being so low at the time. And before it broke down, you could see that over here on the left scale, you could see that it was roughly at, what does that say? Let's call it 16.24. All right. And then I just want you to remember what happens over here. This is where price going sideways. Everyone's hoping things are going to come out. And then on Wednesday, November 14th, price fell off the roof. We're going to look at November 14th in 1 second over here. That's going to be November 14th. But right now, I just want to then have you look at this low volume, historic low volatility. And we'll fast forward to real time right now when we're looking again at that volatility being at a similar number. It's low. It's under 20. Here you go, 18.36. Very similar, right? But you can see the volume has been rising ever since that June low. And when I say rising since, let me zoom out a little bit. And you can see the rest of over here from all the way from the summer of July of 2021, right? Even that 100% rise up, 120% rise up. How many people were bearish at this area over here in July 2021? They're bearish here today, but they missed this 130% move up on Bitcoin and they claim victory. It's quite weird. Are we going to retest the low? I mean, are we not retesting the low right now as we continue to go sideways? I think we are right now. We've been testing the low over here ever since September, right? And then all through October. And now into, or getting close to into November, we've been testing that low. And so we continue to test the low. It's a question of whether or not we break down. It's more of an interesting look on Ethereum. Let me just jump over to Ethereum really quick. And why I say that, I'm going to zoom out into the June low over here. And you can see on Ethereum that we're testing the break. Like here's the resistance in this area, right? You can see this resistance off of the June low. Price makes the low, comes over here and confirms that as resistance. And that's what price is testing on top of right now. So, I mean, is that testing the low? I mean, I guess the low would be down over here on Ethereum, not the spike low, but this is like testing the low would be more towards the whole number, towards 1,000. But it's testing the resistance over here, right? Which is now support. So I think it's a little bit more interesting on Ethereum, whereas Bitcoin looks a little bit different, right? You have the June low over here, and we're testing it right now. You can see that that's the equivalent to 1,000 on Ethereum, not the spike low, but the low over here. And we continue to test it. We tested it on that spike down on the CPI reading just the other week, and we're testing the low now. And it could go either way. A big move is coming. Prices coil down. It's consolidating. There's a difference between what happened in 2018, and one of those differences is volume. Just pointing out the volume to you. But the main driver of what happened in 2018, the main driver of what's happening right now is the Fed and the Fed policy. And in both cases, they were tightening, they were raising interest rates, and they were running quantitative tightening. Both of those things are happening right now. Now, if indeed we are looking at a pivot coming into the market, and you might say, well, why would they pivot? Inflation is still running high. Well, that's all true. The inflation is running high, and inflation has been running high for the last couple of decades, and it will continue to run high. But they're going to be able to say in the months ahead that they were successful in bringing down inflation, as instead of running at 8-9% a month, you're going to start seeing it drop significantly off the way that they're measuring it. If you look at rents in real time making up, right, of course, CPI making up with 40%, you could see that they are coming off pretty sharply in the months ahead as that begins being priced in. That's going to show up. And the only outlier or the only worry is, and continues to be for myself, is if we start seeing a sharp rise in oil, in energy prices, as we get into the winter. At that point in time, then we would continue to see inflation running up. But they're looking to expand the cycle out as long as possible. They're not looking to, when they tell you that they're trying to crush demand, they're tightening verbally. And it's very important that they're able to tighten verbally because it's very effective. Now, when you hear a whisper about a potential Fed pivot and coming from a reliable source, it's a source with a long track record of having inside information from the Fed, it's a little worrisome. because then the expectations are that you're going to see some type of front running of that behavior. And very quickly, all of this tightening could be undone. Now we have the next 2 weeks are very important. We have next week is full of earnings. Over here, you're looking at more of like manufacturing services and manufacturing PMIs out of Europe. I don't know how much, or how important that is. Consumer confidence has continued to be something, one of the more important events. But you're looking at Bank of Japan, the Bank of Canada coming out with monetary decisions. And then most importantly is the week after, Wednesday, you're looking at, first of all, FOMC press conference, and you're looking at Friday, the non-farm payrolls. But prior to that and right before that, you're looking at this week over here. Next week is full of earnings. I think 46% of the S&P 500 reports. You're looking at big tech earnings. That is really going to drive the market going forward, including what happens, obviously, with the FOMC. So, look, I don't know what's going to happen. Talking about the drop down over here in December, let's take a look at what was going on that day. The catalyst for the breakdown was the Fed chair speaking, right? Let's take a look at what he said and how it was being interpreted in the real time. Before we do that, let me jump back over to looking at what's going on over here. And again, it seems that the market, even with this new information, is pretty firmly pricing in still a high probability of a 75 basis point hike. The Fed speakers have been pretty consistent that they want to get the higher hikes in forward, right? And they were talking about even ones they had planned for 2023. They were talking about it might be better to get those into 2022. Let's take a look at December over here. And we could see that the odds of the 75 basis point hike in September now seem to be coming off a little bit. And I mean, it's all interesting. It's all happening in real time. I expect over the next 2 weeks, whatever this looks like today, to continue to look different. Before we continue forward, I just want to get a look at what's going on across the markets over here. Let me pull up the chart, and we can see that the equity markets now obviously rallying on this news. Bitcoin has turned green. And again, I guess it has to be more with expectations coming out from the Fed as we're looking at the 10-year also now trading negative. But I wonder, does it have to do with the options expirations as well? I sincerely don't know. And guess what? If you lose the idea that you have the truth and live in the truth, it just makes things a lot easier. It really does make things a lot easier. All right, let's jump over here. Let's take a look at what's going on. And this was November 19th. The markets think that Powell blinked at his speech in Dallas. And then we talked about, and this is something that I believe, that the goal is always to keep the cycle going as far as possible. That's what the job the pause plays. When they get to a pause, and bite right, blah, blah, blah. By the way, the pivot that we're talking about right now in real time is not a pivot. They're not going to pause rate hikes. They're looking at a turn in rate hikes, a lesser degree, right? So that even expands out the cycle further. Once you get to pause, the thing that becomes the worrisome is when they start cutting rates. That's when things are going from bad to worse. When they start cutting rates, that means the economy is really getting weak and they need to start cutting them down to zero. That's when you're going to see markets again under pressure. Right now, the economy is running hot. They're hiking rates, but if they start moving from 75 basis points down to 50 or 25 to get to that eventual pause, you're expanding out the cycle. You're giving it more time to run. It's all very good, and I've said it throughout 2022. I'm only wrong if things break, right? If things break, and everyone's been looking for them to break, then I was really wrong. But I think what the Fed is doing and has done has masterfully engineered a soft landing. Now, I know that sounds crazy to everyone, but we're in November, we're in October. People back in March, April, and May thought things were going to break and this was over. It's not the case. They keep going and they keep doing it well. So let's take a look at what happened over there. And this is kind of funny. It's going to be funny to all of you. They're talking about the Fed's expectations of their hiking cycle, of where their neutral rate was going down. This was 2018 November. This is looking forward to a year forward to 2019. And you could see between November 12th and November 19th in that 1 week, expectations went down from a neutral rate somewhere between 2.75% and 3%, all the way down to 2.5%. Is that right? What am I reading? Yes. It went down from expectations of 2.75% to 3% down to 2.5, 2.7%. It went down 0.25%. And altogether, all through all the curve, it went down a total of 10 basis points. And they're talking about a big pivot in the Fed's expectations. It's kind of funny now as the Fed is, hiking. When that first 75 basis point hike came in, people were not really prepared for that. And Powell, what did Powell say? He's like, it's not going to become a habit. Since then, we've seen 3 hikes at 75 basis points. 4th one coming up soon. It's become a habit. How do you trust what these people say and when they say it? It's gonna be important right now as you listen to what else Powell says right now. The markets have decided that Chairman Powell definitely blinked. Okay, and the reason he blinked is because he said that something along the lines of, right over here underlined. He's talking about the strength of the U.S. economy. Right, was also noting the headwinds abroad and in housing. Normally, the Fed is able to tighten because the economy is strong. It's actually overheated, so they need to put on the brakes and slow it down. So here's what he's talking about in 2018. And he's like, look, the economy's strong, but we're starting to see some headwinds abroad in the housing market. One of the things that's been so effective about this tightening cycle is that the sincere unknowing is the Fed tightening into a slowing economy. And when the the difference between a Fed tightening into a strong growing economy and the Fed tightening into a slowing economy is really important, because when the Fed tightens into a slowing economy, you move into an extended, rough, bear market. When the Fed tightens into a growing economy, normally you see risk make new all-time highs. Now, I think that we might be in between. We're in unprecedented times. And in the beginning, we went into 2 quarters of negative GDP growth. That's not a growing economy. That is a slowing economy, right? And the markets acted appropriately so. But then we saw a little bit change of that. Right now, we're looking at a pretty explosive growth, almost close to 3% in a tight job market. So I don't think it's so easy either which way. Let's keep going down and see what happens. Now, in light of that, the Fed believes the neutral rate policy is neither stimulative or restrictive and is around 3%. All right, that's important because they never get there. And wherever the Fed's dot plots are right now going forward, they're not going to be correct. You have to understand what these people say, whether it's the Federal Reserve or investment banks letting you know what's going on in the market. They are never correct in their analysis. The Fed is currently targeting between 2 and 2.5% with expectations of another hike in December. They got that hike in December in, by the way. Here we go. Vice Chairman said that we are close to the neutral rate. If anything, reinforce the dovish slant. Those words are what Powell said over in the September. In the August FOMC, right? He said that we are close to the neutral rate, or July or August, I forget. And then he had to walk that, or the Fed speakers walked that back over the next 2 weeks prior to Jackson Hole. And in Jackson Hole, Fed Chairman Powell cleaned up his mistake and came out overly hawkish. But when Powell said that we are close to neutral, was he lying? Do you believe him? Do you take him at his word? For me, it was like a Freudian slip. I really believe that he believes that they are getting close to neutral. Here you have the vice chair saying that, and that was considered a dovish slant. Now, listen, what Richard is saying contradicts Powell, who's saying Powell at the time is saying that we are a long way from neutral. So at the time when Powell was telling you, by the way, the Fed pivots a month later on their last rate hike, was Powell lying when he told everyone that they were a long way from neutral? A lot of people take the Fed at their word. I can't remember that the last time that the Fed said anything, inflation is transitory, that was absolutely correct or not a lie. Either which way, the point of all that is, well, twofold. You can't take them at the word, you can't trust them. And then also this over here, this was off of just a Fed speaking, the collapse and the trigger. The trigger could come from anything. Just be aware. I don't know. There's not a lot much to say of that, except it's very interesting and very interesting to look at what was happening in real time, what caused the breakdown itself. It did not come from the Fed raising rates, from pausing rates, or anything like that. It came just from actually a lot of uncertainty about what was next. It looked like why pundits were talking about the Fed blinking. Powell was not blinking, and it was actually a contradiction between what Powell was saying and what other Fed chairs were saying at the point in time. As they were coming off dovish, Powell was coming off hawkish. They did hike as expected that month, or that coming month in December, and then that was it. That was the low on the hike. I don't know. I don't think it's going to look like anything like we saw back here 4 years ago. It could. History often rhymes, but it's really good to be aware of the history and what happened as we continue moving forward. And that's it. That's it for this Friday session. Yeah, Dave, with the other central banks easing, are the markets in the green? I'm remembering Venezuela. So I'm often reminded of, you've heard a lot about in Germany, Weimar Republic, when you were seeing the last throes of that system, and things were really, really, really volatile. If you look at the German mark priced in gold, it had enormous swings to the upside, to the downside. If you're trading this type of stuff, you got to be a professional. If you're an investor, you got to be so firm in your understanding of the financial system and your thesis, and you cannot get shook out at the extremes. There's no question about that. And a lot of people pick up on the turn, not at the turn, but kind of like towards the middle of the sweet spot, and it makes for bad positioning. I think that as we move forward in the future, when we just see this, I think the cycles are going to get much, much shorter, right? Do you remember, Dave, March, April 2020? We said the last crisis was 12 years ago in 2008. I think that the much crisis is going to be much sooner. The expansion of the Fed's balance sheet was significantly greater. Instead of $85 billion, $850 billion was a massive amount in 2008. It was 4.1 trillion followed by 1.4 trillion for the next 2 years. The next expansion of the Fed's balance sheet is going to dwarf that as well. Now, when the next balance sheet comes, I think it's not going to be tomorrow unless something breaks. I think it's going to be in the future. I don't think it's going to be 12 years from 2022. I think the cycles are going to get significantly shorter, and then the injections significantly bigger. And then the tightening cycles in between, as you can see from this one, are much sharper as well. It's going to get violent. I think that I don't think that we're looking at the last grats of the system. Remember, monetary reset is going on. The current system is unsustainable. It's mathematically impossible, and everyone knows it, which is why you see this new world order developing. And everyone is jockeying for position, including the Davos elites and Klaus and the World Economic Forum. Who are they, right? And could you imagine the influence they have across governments all over the world? A lot of talk at the recent changeover of government happening in the UK being one of these, they're calling it a globalist coup. I don't know. But if you look at who's in power now, you know what side they're on. So, yeah, I mean, Lou, I'm wrong if things break, but I said that in April. I said that in May. I was like, look, I don't think things are going to break. I know that every podcast you're listening to is telling you things are going to break. I don't think that's going to happen. And I'm wrong if things break. And I'm unprepared. I'm wrong on that. We're now into October, right? So, I think things are going to, the music's going to keep playing until it doesn't. You start seeing lots of this like beautiful meme work out there, this beautiful Twitter posting about like the unraveling of the sovereign bond market. And yeah, that's real and it's happening. But I think people's expectations are that it's going to happen a lot sooner than it's actually going to play out. Remember, they are masters at keeping the music playing. And that's what's going to happen. All right. God bless you all. If you didn't hit the like button and you're on a mobile or anything like that, please go ahead and do that. Please go ahead and hit the like button. Glad to be live with you all on this Friday. I hope you all have a beautiful weekend, and God bless you. Thank you all for being a blessing. Have a beautiful day, everyone. I'll talk to you soon. I'm going to go out over here with a little bit more honeymoon. I enjoyed that this morning. You too. Have a wonderful, wonderful weekend. Oh, I didn't see this. Let me take a look at this. I didn't see this question. So B-Rug, I wasn't trading Bitcoin back then, so I don't know. Like, I don't have any type of, I wasn't trading. So this is like an erroneous print over here. Can we look at that on the BLX? That'd be not going to show the print. We're gonna see any type of similarity, or it doesn't remind me of anything similar. I was not trading Bitcoin at the time, so I don't have that type of that experience of what was happening at that time. And I could look at price, but that doesn't, like, there's a big difference between actually being involved as a market participant and then looking at it after. And so let's just keep it simple and say if there were some type of similarity playing out, then maybe, and would it look like seeing price actually holding these lows over here, coming back up and testing the August high, right? Maybe even taking it out to catch a lot of people on the bull side, coming back down again, right? And then when it came back down, it could come, in the last time it took out whatever low was over there. So could it take out somewhere around 18,000, maybe even come close or even take out that low before finally putting the low in and then swinging up. A lot of people talk about the end of the hiking cycle being in this area, right? Into March 2023. I look, I mean, this is like the theme of the day, or not even the day of, who knows? I certainly don't know, and I can't see why something like that can play out. I don't know what type of edge it offers me. Honestly, I think it's good looking at past bottoms and looking at how they formed. I think that if you saw some type of price action developing like that, where you saw this happen, let me get rid of this. where if you saw some type of price action where price was able to come up and swing up pretty quick by the end of the year and take out the high over here, that obviously gets a lot of people waiting for that big breakout and thinking that, well, 30,000 is pretty short from 25,000, and then like swinging back down and getting all the bears back into it, and here comes 3K, and it could happen. And that I mean, that would be difficult for a lot of people to trade, I imagine. I think I would love it. I know I would love it, and we would just continue to, whether it's going up or going down. But when we see big swings like that, that's just gravy for the P&L. The only thing that's bad for the P&L is sideways price action, which you're seeing right now on Bitcoin, you're seeing on Ethereum. And this just shows why portfolio allocation should really be focused in on during that weakness of the crypto market. You're seeing altcoins bleed. Cardano going down or up, it doesn't matter, right? Make money on both sides. All right, everyone. God bless you. I'll see you all next week. Have a great weekend, y'all.